What's going on? Another Sunday. Today is actually Sunday, November 19th. Hopefully the audio is good. Let's go ahead and get this off. Um, we're gonna look at a couple of different markets. So I'm doing my top step right now. We're gonna go ahead and just remove this and start emitting on a weekly and work backwards here. See what we see. So weekly, couple areas I would look at. So last week, obviously, we see that there was still um, bullish intent here. There is, and I'm just gonna mark it out because I'm looking at it and I can see it. This is not anticipatory, but actually it is. I'm not saying that this is gonna happen next week, uh, but I just like to mark that out as an area. The other reason I'm marking it out is because let me make this bigger so you can see it because as I can see it, relatively small. So I'm going to pull this down and we're looking at from the top of this wick here, which is the week of the 23rd of October, to the bottom of this wick, which is the week of Monday, 6th of November. In here, is a gap in price, right? Or otherwise called an FVG or a fair value gap, depending on what your methodology is. But at some point, this will either be fully mitigated or the orders will be fully paired, or there will be some level of encroachment to 50% within this uh, fair value gap later to be mitigated later at a future date, to be completely paired to continue long, or to be traded into and through to come back to collect more orders to then drive the market lower. Either or, but this would be an area to be mindful of. But at least at this point, at the outset, I'm looking at this as basically this is where there's insufficient price delivery for sell side delivery. Layman terms, this is the last short or sell side candle in this 4 week span of price movement. There's nothing else in here that would indicate that there have been, and I have to change my verbiage because my, how shall I say, my development as a trader has changed. So vernacular and the idea of what is actually occurring in the markets is not really derived from just the simple buyers and sellers perspective. So we'll just simply say that this is the last time that there's been sell side delivery in the last month. So at some point, price is coming back here. Um, Having said that, when we talk about sell side, here is a buy side. So this is something that I would be looking at to target potentially for this upcoming week. Let me just draw that here for right now. Um, so what I would be looking at for the upcoming week, and I know that we have FOMC meeting in minutes. I know my fib is a little different, so just bear with me just for one moment. Okay. So that is, excuse me, 459375. All right. So essentially, I just finished talking about fair value gap for the price leg from down here, right? So what I'm doing here is I've marked out, and we'll just pull this to right there and this to here. Okay, perfect. So this would be an indication of the last time that there was, excuse me, a buy side. Now, there's an argument that could be made, which would be valid, that this isn't the last time buy side was provided in the context of this bearish move. You could say, well, this is the last time here, and that would be true. But just as I've drawn a 50% retracement within the body of this bullish candle, and a lot of people, regardless of what your trading strategy is, I'll just explain it this way. Okay. I'm looking at buy side delivery and you've got sell side, right? You have buy side that comes in that does not mitigate, does not pair any orders here. The argument could be made that you had some order pairing here, which would be correct, and then price ran away. So there was a good reaction. If you took a short here, outstanding. However, what I'm now looking at is the very thing that I've drawn here for this candle. So if, hopefully I don't lose you by doing this, but we'll take the same context, and what we will do is I will use array from here, and this will be 50. Okay, and let me eliminate that. So again, trying to provide some level of context, and if there is a retracement this week, where that could potentially go. So I utilize a little bit of a different um, pricing context and some bias with where I think price may or may not go. I know we're getting into the holidays. A lot of people would say um, maybe take a position today, tomorrow, and maybe that first or second week in December, and then they're off the charts until, say, February, because little to no movement in the market, whatever, yada, yada. Okay. Be fair. I mean, if that's what it is, that's what it is. However, okay, so the 50% encroachment. So all I did was I took the fib that I had out here from this candle's wick high to this wick low. This was the buy side delivery. As price broke down and it came back up, it did two things. And I could show you here as well. Actually, I probably should have shown you on this candle because it did do the same thing here. Let's go back just a little bit. So you have basically sell side delivery or the short here. It left this last buy side, right? Inefficient buy side delivery. So when this candle closed, you had the open here, you had a very small negative value wick, and then the push back up into this candle. Well, I'm going to draw one more fib. I know you're probably tired of the fib drawings right now, but I promise you this is going somewhere. And this is not 100% guaranteed, does not work all the time, but again, context, just context. And we're going to do the same thing. So this full candle, this is 50% on or about. And let's just, for kicks and giggles, I would usually say something else in giggles, but we'll just call it kicks and giggles. Keep it some level of PG today. And let's just change. Kind of want that to stand out. Beautiful. Beautiful. Okay. So we're using basically this last buy side candle. So price pushes down. Okay. When this bullish candle forms on this week, it's not a encroachment of the 50% level. The reason it's not is because it closes above this 50%. So the way that I look at price, the way that I look at fair value gaps, especially if there's inefficient delivery of price, whether it be buy side or sell side, I will always take 50% of whatever that candle range is. And because price is fractal, this applies weekly, daily, 4 hour, 15, 5, 1 minute, doesn't matter. It's all gonna be within the overall context of delivery, but it's always gonna be in relationship to how price delivers. Okay. So once this candle comes, if let's say this bullish candle just provided a wick, it wick through and it closed below the 50, I may still look at this and consider a short. The moment that I get a body closure, and I know you could say this is hindsight, we're looking at this candle closure, this candle, and this candle. So we're two and a half, about 3 weeks away from this price action. Trust me, you'll appreciate the fact that this is some level of hindsight. So if and when it happens again, you know the anticipatory uh, direction or potential bias that you implore would be based upon previous closures, previous price delivery, which would allow you to have a certain bias in a particular direction. Okay, so you'll appreciate it. Having said that, this is 50% from the low, body closure above the 50. And the very next week, what did it do? It came back, it created a negative value proposition from the previous week, mitigated the open, or excuse me, mitigated the closure, but it also came back and look at what it did. It tapped into this 50% and moved away. So now we're in another situation where you could take this last buy side inefficient, excuse me, this last, well, yeah, this last sell side, buy side inefficient delivery. This is my 50, okay, of this candle closure. Here's my body closure. So this candle closed above this 50. So me personally, what would I be looking for this week? Potentially, I'm looking for an open and a negative value from this previous week's closure, potentially reaching back to 44.81. I know that's a pretty big ask, but my overall bias and context is we might reach up here first, but before we reach, there has to be some type of movement or open mitigation. And typically from the weekly, we usually see a negative value placed, especially if the market is going to push long, bullish, or higher, depending on your verbiage, your vernacular. So again, for me, this was just kind of context, just to give you an idea of what I would be looking for. But I'll go ahead and I'll draw this out here too. That will go like this. I'll just put that there. I can actually minimize this because this is a weekly. So yeah, I would be looking for a reach in potentially. Um, you've got buy side liquidity here that would have been cleared. So this could be potentially another indicator, or it would be something that would lend itself to a probability of a negative value position being created on the next weekly candle that it would trade back in. Why? Because it recently took this buy side liquidity that was resting above this high. Okay. Um, And then if you wanted more context, even though this is a bearish candle, this is on or about 50% retracement. Each wick can, and depending on your level of understanding, um, mine takes me to, even though this is a wick, these are body open and closures on a different time frame, potentially a higher time frame. But the long and the short, each wick from the body is its own supply and demand, or own S&D, or own PD array premium discount. So I would look at this and say this is on or about 50%. And if you want to do some level of fact check on your boy, let's see. Let's pull out another Fibonacci, because there'll always be a naysayer that says you don't know what you're talking about. Everybody's understanding is different. Okay, so again, this candle body to this candle's wick, and this is just cleared 50%. So just again, I'm not just talking to be talking, and this is not financial advice. This is for educational purposes, so please don't sue me. All right. So again, taking 50, it's a wick. Again, it could be a body on another time frame, but for context purposes, and because this is for the coming week, I would again potentially anticipate a negative value open. Let's see, that was taken at 45.14, which was this previous week's high. This wick came in at 45.40. So, um, so if you're trading futures, I'm not telling you, I'm not suggesting, just what my potential bias would be. I might, if I was looking to take maybe a short position, I like dealing in the round numbers. So like a 45.20 would be something. However, that could be the gap down, or the gap open today from 45.23 to gap down to 45.20. But we can get rid of this now that I've shown that. So yeah, short bias for this week, open potentially back to 44.80, and then from 44.80 I would be looking for longs back up into, this is 45.93, but honestly, I just told you I would be looking for I like the deal in the round. So this would be my target. So 4600 would be my target long term. Short term back to 44.80. Coming into the holidays, depending upon what the FOMC talk is going to be on Tuesday, that could be the conversation and the piece that drives the price back short before a continuation long. But again, swept buy side here. Price could continue long just to clear any pricing inefficiency. Let's just move down to the daily just to take a look. So let's see. So let's see. So this is buy side. Um, and within another buy side model, this would support my idea that we're actually looking at Excuse me. This would be a sell side inefficient buy side delivery. So we've got wicks. So let's see, that's a push in. I would be looking for shorts beginning of this week. And the likelihood is I will probably only be looking to take positions between um if it is supported. Um and by if it is supported, I am working my way into just trading a very strict set of times every day, excuse me, or when the opportunity avails for a certain delivery to be as obvious as possible. I mean, nothing is ever obvious, but I don't want it to be arbitrary either. Again, we're just going to go into what I just showed you on the weekly, and then we're going to take a look and see because the 50% has just essentially been wicked through. Right about there. So you have a 50% wick here. Tap into, no encroachment beyond, obviously no body closure above. So my supposition or my support would be within this general context. We had a move long. So this is one, two, three. So we've had basically the last 4 days. So you could say um, Tuesday, Wednesday, Thursday, and this would have been Friday. Friday provided a pullback inside below that 50%. So I mean it's a huge stop just in terms of S&P future. So if you're some level of whale, excuse me, and you'd have the funds to do it and you wanted to be a positional trader for this market, you might put your stop right there at 45, 41.25. Um, and I would say you're doing that based upon, again, this being an S&D by itself because you've got an open, a mitigation long, a push short, but then a retracement short. So this is going to be the body closure. So again, on the daily, we looked at the retraction or a negative value open today, which means that on a weekly time frame, it would appear for the futures that it will gap short or just open short before, mitigation into value. Um, that mitigation into value from the weekly as it translates to the daily means that it could literally take 50% of this candle's S&D, supply and demand PD array. What again, whatever verbiage vocabulary you use. So just scaling this down. And I mean, I'm doing it for a video purpose, but I'm also doing it where this might actually be something that I would look at um, if price actually opens, delivers in this fashion. All right. Rid of that. So this would be essentially, I don't want to say like a no man's land, but anybody that's ever watched Planet of the Apes, this essentially is going to be the forbidden zone. This would be the forbidden zone for body closures. If I get a body closure here going forward, then the potential could still be that one price could still close short because this is basically going to be my invalidation point. Why? Because this candle, this wick is essentially the 50% encroachment for the larger inefficient buy side delivery zone. So that just simply means, again, layman, new trader, if there's a body closure this week that exceeds this wick, then this whole short idea is invalidated because we could look for price to push higher, reaching for some other fair value gap, some other price inefficiency before maybe a continuation back short. So, in the interim, because price hasn't opened today, don't know where it opens. Again, we could see the negative value from the weekly trade short just at the open. It could then push long, which would push it into this delivery area. We'll go down to a 4 and a 1 hour so you could see what this looks like in terms of what I'm talking to you about. So, just very quickly, if this were to be uh, this 50 to be tapped, that is 45.33. I don't really like that number. That's 45.39. Um, yeah, I'm not really crazy about those. So if it's a 20 level, a 50, an 80, or it's a round, those are typically where I like to see um, price. 30s and 40s, not really. 60s and 70s, not really, because typically those areas will show you reactions through, not where price is going to respect those levels. Um, and again, obviously, if I'm looking here, I could literally be looking at the S&D for this candle wick in terms of an exit short. And let's see, that is about 45.02, which I would just round to 45 even. So 4,500 even. Um, you could take this short to 45.20, which is just above this area. If it is to trade back in to this inefficient buy side, you could short it to 45.20. So let's drop down to an hour. Yeah, that's kind of just up there by itself with that S&D. But let's see, we got a little S&D back here. Yeah, this will be a little bit of an interesting week, honestly. Um, that's why I said it. You just have to see how price opens because we've got a gap here. So essentially, there was a gap down. This is the 15th of September. So you had a gap down open. Friday. Yeah, so Thursday the 14th of September, and then we had this gap down. It gapped down and opened on that Friday, and it continued short. So we actually have two things going on here. You have a price void, which now will invalidate my whole idea of this S&D a little bit. Um, I don't know that I've annotated price voids on my on a template. We're gonna find out here together. No, I have not. I have not. So let me change this and then I'll do this uh, now with you guys. And then we're just gonna, because this is a, We're gonna call it what it is. It's a price void. Some people will call it a gap in price, like whatever. Again, whatever the verbiage is, it doesn't matter. As long the only thing that matters is that you understand what it is that you're looking at. Um, I'm just gonna call it what it is. Price void. I like to save these templates for myself because it just makes, when you see certain things, it will just kind of help you navigate. So I'm gonna keep this just for right now. Try not to draw too many boxes and circles and pictograms and go all John Madden on my chart. But the reason that this is an area of interest is because, again, one, you have this gap down. This is September. Obviously, we're going into what, the third week in November. So this happened 2 months ago, and now we had a significant gap up last week. So it's kind of like, what's the probability? The probability could be one, if I'm looking at recent price, this is an hour. You got some inefficient delivery, but you've got equal lows here. Those are equal lows. These are equal lows. So at some point, obviously, these will be run. Um, a tap in and a push, a move away. But again, we might just see a retracement here to this last inefficient buy side. Um, the run of these equal lows, a move back up and in. It may mitigate in here, and then at some point for tomorrow, who knows? This may be the void that gets filled based on FOMC, and then it could, continue to move short before that resumption long. So, um, I would at least say, just looking at this, and I'm not going to go any lower than the 1 hour, but right now, I guess my supposition would be based on that void and it being, 2 months ago. Again, we don't ever know. I don't know that, you know, um, a 2 month old price void is going to get filled now. It's closer to the holidays, so my mindset and my thought process is sometimes you'll have big money institutions take a position or take profit off the table, or the composite man will drive price in such a way that he can fill this void, they can collect their profits, and then all of us retail will inevitably be stuck, either guessing, gambling, or just sitting on the sideline, which is kind of what I'll probably do. I may take a position in a paper trade account and then just watch and see how this plays out. But ultimately, I would say at the open, I'm still sticking with what my probability was, which is I'm likely to see a negative value open this Sunday, which could very well clear these equal lows. Okay. So buy side swept. So this was that buy side that was taken. So let's see. When the buy side was taken here, I'm looking back to see what it left. So collected those orders, maybe gave the indication in here that it was going to continue short. So it trapped those that were going to try to sell short here based on this wick and these body closure. Well, this body closure below, right? And then this open, this mitigation should have negated anybody that was looking for continued short, but everybody not knowing what they would have been looking at would have thought, okay, this is a continuation. Because remember what I said, this wick on another time frame is a body open and closure, bullish and bearish. So someone could have been faked out, but essentially This would have been a manipulation in some cases. I'm not saying for 100%, but it could have been a manipulation to trap those looking to go short. Price would have moved back in fully mitigated. Um, yeah, yeah, I would stand by that. I would stand by that thought process. It was to trap those looking to go short, because once you have this bullish candle close, this candle open reject, you've got some level of displacement here, this manipulation, and even though it closes back up inside, if you were looking at just buy side inefficiency, you would have said, here's a wick that cleared the 50, but it was in a body closure. It was a wick, right? Comes in, closes. This one opens, it starts lower. It wicks. You're thinking that you're good, and then you get taken out. It takes it out. It takes it a little while, but it does take out that delivery. So buy side continuation, long. Yeah, I would look to see potentially open negative value short, maybe clear this equal low, and potentially reach back here, clear this equal low as well. This may act as some level of support in the interim, not long term, but in the interim for the open. And then maybe a mitigation of price void, a move back inside, and then a move away. So, yeah, we'll see. So, like I said, I'm looking for a short initially at the open, but I'm looking to see if this void gets filled before Thanksgiving. So, good grief, 37 minutes. So we'll see how price delivers. I appreciate you guys for hanging out, and see you next time.